Hey everybody, welcome back to another video. Soil here, and today I want to teach you how you can confirm breakouts. Not every breakout is a valid breakout, and many of the times the breakout is a false breakout, leaving you in a trap, either hunting your stop loss or forcing you to exit your position with loss. In this video, I'm going to show you some practical ways that you can confirm a breakout so that you decrease your risk as much as possible. Stay tuned and let's get started. Alright, first let me explain what a breakout is. When it comes to breakout, the key concept that you must be familiar with is support and resistance levels, because support and resistance levels are the basic elements and the core of breakouts. So to correctly identify breakouts and successfully trade based on them, you must completely understand the concepts of support and resistance levels and have the skills to correctly identify these levels. If you're not familiar with the concepts of support and resistance levels, I have a complete guide on how to identify these levels, the link also in the description of this video, and I recommend you to watch it first if you know nothing about support and resistance levels, because to continue with breakouts it's necessary to be familiar with the concept of support and resistance levels. Alright, getting back to breakout, a breakout is actually a price movement outside a defined support or resistance areas, and this breaking out of the support or resistance level is usually the starting point of increased volatility, which causes larger price movements in the direction of the breakout, and many of the times it's starting of a new trend. So when we have a breaking out of a resistance level, actually the price breaks above a resistance level, it's a good opportunity to buy or enter a long position, and when the price breaks below a support level, it's a good opportunity to sell or enter a short position. But the market doesn't always go the way you expect, and many of the times the breakout is a false breakout and you need to confirm the breakout. And please pay attention that it's never going to be 100% confirmed breakout. Financial markets are not like this, and there is always a probability that the market may go against you. All you have to do is to decrease your risk as much as possible by entering in trades that have the highest probability of getting the expected result. Alright, now let's see how we can confirm breakouts. After identifying your support and resistance levels, which can form as horizontal levels individually, or they may form together and form a trading range where the price is trapped between support and resistance levels and makes a consolidation period. The support and resistance levels are not necessarily horizontal. Trend lines are also support and resistance levels if you're familiar with them, and also as the price consolidating between support and resistance levels, different formations may happen on the chart, like rectangles, triangles, wedge, flag, pennant, and other patterns like double top, double bottom patterns, head and shoulders, and so on. All that matters is that the price is gonna break a support or resistance level, and we must wait for the breakout, a valid breakout, and we must confirm that the breakout is genuine. It's not a false breakout. The first method that we can use for confirming a breakout is price action, and it demands patience. We must wait until the price breaks the support or the resistance level, but just passing the support or resistance level doesn't confirm the breakout, and we must wait until the candle is closed out of these levels. Please pay attention that the body of the candle is what we must pay attention to, it, not the shadows. The larger the body, I mean the further the close goes beyond the support or resistance levels, the stronger is the breakout. You must wait for the full formation of the breaking candle. You must wait for the close, no matter how far the price is going and shooting out of the support or resistance level. There is no way to be sure that this is a breakout until the candle is closed, because many of the times this happens, but finally the candle closes where it was at the beginning, and it turns it was a false breakout and leaving your stop loss haunted or force you out with loss. So you must wait for the candle to be closed out of the support or resistance level. The larger the body of the candle and the further the closing price of the candle is from the breakout point, the better. But this is not not enough. And besides the price action, another method that we must use for breakout confirmation is volume. The volume must also confirm the breakout. When the breakout happens and the price closes considerably out of the support or resistance level, the volume must also increase significantly. You must see at least above the average volume. The greater the volume, the better. This shows that the market is in an active mode and the market participants are reacting and entering heavily in the direction of the market. The increased volume on the breakout shows increased interest of the market participants in the direction of the breakout. Another method for confirming breakouts is using momentum and volatility indicators. For example, by the help of MACD, we can find out if we have increased momentum in the direction of the breakout or not. Or by the help of Bollinger Bands, which is a volatility-based indicator, we can find out if there is increased volatility or not. For example, to see if the price is getting out of the Bollinger Bands squeeze and the bands are expanding, which shows starting of a new movement. Just one point you must pay attention is that indicators are derived from the price, so they lag behind the price, and in compared to price action methods, they give late signals most of the time. For more confirming the breakout, they work well, but they usually provide you a late confirmation, so you may lose parts of the move. Using indicators for confirming a breakout depends on if you are an aggressive trader or a conservative trader. As an aggressive trader, you may see the indicators confirmation late, and you may prefer to take the trade on the price action confirmation because you want to take more risk in an exchange of more rewards. But as a conservative trader, you want to decrease your risk as much as possible, so you may prefer for more confirmation even if they provide you late entry but a safer one. Another method for confirming a breakout is using the bigger picture. By the help of this tactic, we only trade breakouts that happen in the direction of the overall trend. You can discover the overall trend either in the same time frame or in higher time frames. So in this case, we find consolidation periods that can be a rectangle, triangle, or others that occur in the middle of a trend, or it can be in the form of price channels against the trend in the pullbacks. And we only enter a trade if the breakout is in the direction of the prior trend. This is a high probability trade because we are entering in the direction of the overall trend. So by using this tactic, we reduce our risk and actually have a trade with higher probability of getting the expected result. And another method for more confirming a breakout is to wait for a retest of the broken level. Many of the times when a breakout happens, after that the price goes back to test the broken level and then again move back in the direction of the breakout. And this brings you the opportunity of having a low risk and high probability trade, because after the retest of the broken level and then having the price moving in the direction of the breakout, you can be sure with high probability that the breakout wasn't a false breakout. But please pay attention that this method demands a lot of patience because you're gonna wait for a pullback that may never happen, and you must prepare yourself for missing some profitable breakouts that happen without any retesting of the broken level. Aggressive traders who take more risk in exchange of more rewards, they enter when the breakout happens. But conservative traders who take less risk don't enter on the breakout because they are afraid that it may be a false breakout, so they wait for the retest of the broken level and then they enter a trade when the price turns back in the direction of the breakout. As I said, the retest may never happen, but by doing this tactic, you reduce your risk as much as possible and you will have a trade with higher probability of getting the expected result. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you found any value in this video, please like it, please subscribe to my channel if you haven't already, and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.